The bottom line is these shaded areas right here is where we make our money. That's a 44-day uptrend. That's a 15-day uptrend. That's a 22-day uptrend. And then we went to a downtrend right here. Let me just delete these and you can understand. So I'll draw lines. There we went to an uptrend. And by the way, the IBD, I did this in the last video and I had to re-record it, which I'm doing now. I do subscribe to Investors Business Daily, and the big picture, or the bigger picture, every once in a while has some interesting comments. It pointed out the E-rating distribution on the NASDAQ, the Dow, and the S&P. Doesn't happen very often. Usually when we get to that kind of, I don't know if you want to call it capitulation or oversold territory, the market usually reverses on a dime and then we go right back up. And they said that happened on January 3rd. Interesting observation. I do like the IBD. It's not the trading Bible. I do like the bigger picture, and I do like accumulation distribution. With that said, the bottom line is, you could have the Trader's Almanac. By the way, in the Trader's Almanac, we have what? Pivotal lows Thursday, Friday before OPEC. So there's a lot of different trends that you'll find sometimes. And by the way, they're always going to diverge at some point, meaning it's going to be too easy to catch on to those trends anymore, and they don't exist anymore. So will the IBD be right about that? Who knows? The bottom line is we knew where our line in the sand was for investments. We knew when we went to a downtrend to preserve our money. We know when no trend to preserve money. NASDAQ's in a 15-day downtrend. So we already know we've been preserving capital for a while. Okay? When we broke an uptrend back here, what did David Patrick do? Real simple. I went to cash. It's not like I became extremely bearish. I just knew at best the market was going to be sloppy. And it was. Did I know that we were going to go down 20%? No. But I got long here. And by the way, when I went cash here, I am fully prepared if I'm wrong to get back in on price strength confirmation. No problem. I can do that. So when I went cash here, same thing. This is a double top. Triple tops don't hold. Guess what? I would have got long if we went to a triple top and broke out. That didn't happen. All right, so now what do I do? Well, very simple. I'm going to tell you what I'm going to do. I'm going to stay in all cash, first of all. I'm not going to predict the lows. And I'm going to tell you, this Dow Jones means something to me. I don't love trading the Dow Jones or even necessarily tracking it. Let's call it 25. What is that exact number? So we can write it down. The 200 SMA, 25,428. 25,428. Write that number down. It's big. 25,428. Right? Well, we just told you why it was big, and it's because the S&P back in 1957, and by the way, we will diverge from that pattern sooner or later, didn't get back above that 200 SMA for many months, and when it did, it was a green light, and the market just took off, okay? With that said, I have no intention of risking all these huge gains we have until the Dow wants to tell me that it has rules engaged back above the 10 SMA and that this 200 SMA is no longer resistance, that it's support. Now, it could happen on Monday. I don't know. Maybe it happens Tuesday. Maybe it doesn't happen until December. I don't know. But I'm playing defense. I hope you are. I hope you're listening to the tape until the market tells me that I need to be in it. I don't need to be in it right now. Cash is a position.